Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So it is Monday and felt like a long day already. The headlines that have been coming out each day seems to continue to show the dysfunction that we're seeing in Washington. You know, everyone knows what's going on. I don't need to get into it again, how both sides are so split, and now it seems as if they're looking for this grand deal that could go all the way till about October 17th. So you still have a lot of days that could be like this. So I think it's really setting in that nobody wants to make big bets long or short. But a lot of the things that we've been talking about that have been bending are starting to break. And the Bears are going to have their ball on whether or not they could actually break a trend that's been in place since November. We've talked about low gross, low net. We've talked about trying to sit on your hands. We've talked about so many things that are really hard to do as traders, but you have to do them. When there are times when everything's a little bit random or erratic or don't make sense, or you have these divergences that kind of throw you off your game, you don't always have to figure it out. You could take a step back. You don't have to overtrade. You don't always have to be so involved. For those watching the virtual trade floor, you've seen that Mark probably has the least amount of longs that he's had on all year. You've seen me go, to tactical when we did that breakout failure at 1709. I've been trying a few things here and there, but I've been pretty much frustrated the last 2 weeks where it's been very random, where if you do try and do a few day trades, seems like one day it's up, they look good, and then they open it lower. Then a day that it looks bad and you have short in the brain, they grind it the next day, and there's been no continuity. So again, it's not an easy environment. And now we're starting to get into areas where it might wake up some different time frames, not the macro. If you're 30 years old, don't leave the stock market, or 40 or whatever it is, but there's slight changes that you have to acknowledge, so you know how you need to approach the market the way you want to do it. And right now you look at the S&P, you'll see right here how we've had this trend in place since November, which we've talked about. And it's been a very strong trend with a lot of pullbacks along the way, not big ones, okay? This was that May 22nd outside day that gave us a move to the 100-day. That was about 5%. Then you had a fast and furious move that pretty much you could have jumped back on board right there when you had this move, digestion higher, so you didn't have to catch the bottom. Some guys could have caught it right there. You could have waited for that, and then that took place, and then you had that little small false breakout over the summer right there, which turned into that head and shoulders top, which was right here. The left shoulder, head, right shoulder broke. This was at least a tradable short that a lot of us saw and was able to make money. I know I haven't been able to make any money short during this entire pullback. Even if I've tried to, it's been hard. But anyway, recently we broke above 1709, pushed, then came right back below. Just like a stock, you never want to see a momentum move get taken back, or a breakout failure, which is usually viewed as distribution. And then from there, we've had this lethargic, choppy, random, erratic move back to the trend line almost, and near the 100 days. So with that said, it hasn't been easy, and at this particular point, the question is, do we hold this trend line? Okay, do we come into here, which it feels like it's been a crash just because of where the headlines are and the news is and the media and this and that. It feels as if it's like, and really, if you look at it, if you turned everything off and just looked at where we are, you'd be like, oh, okay, we're coming into the trend line. This is the third time we've been here, so it's a time to, be on your toes and look for opportunities. But if the trend line doesn't hold, you could see a move back to do some type of double bottom at 1627, or for the first time hit the 200-day. So it's just a very, it's a tough trading environment. So when you're trading, and you're in a tough environment, there are a few things you do. You take down your risk. So if you come back to me, you take down your risk, and then you look at signs that could give you clues on how to, make your daily money or your monthly money or whatever it is you're doing. So two sectors that have been strong that kind of weakened a little bit today. They didn't have their bulletproof stature. You have the Russell, so what you want to see, what happens here. We talked about this little upper, wedge type area that if it held in here to go higher, perhaps, that would keep the market in check. But now it looks as if, this upper level could potentially break, right? You close in the lows, kind of engulfing, right into the 21-day. So if this unravels pretty quickly and just even gets to the 50-day, you'll probably see some weakness in the market overall also. If you see the bios, which have also been a source of strength. You know, and again, these little red bars might not mean anything to some of you guys out there, but this is a little engulfing and, you know, something a little bit different. Haven't seen a day like this in a while. So you take notice to see what it leads to. So if you had a high level stop and you've been riding the bios, you know, not a bad spot to maybe loosen up a little bit and say, okay, let me be and wait and see. You know, this trend line here is all the way down here. So, you know, that's two things that changed a little bit. You know, you look at the Qs, not much, just, you know, they just couldn't rally them and ignore everything. This too, you know, you want to watch this 21-day. If it starts to give it up, you could see a little bit more of a downside to at least this trend line, which comes in closer to 78. So there are ways to maneuver that. You know, as a trader, you come in and you're like, okay, sometimes you're like, I can't wait for this type of setup. And a few of these setups, I don't come in that excited because there's not that much to do. You know, there's some things to do, like sometimes, you know, negative to positive, push through the prior day high, you know, bullish setup that could lead to a week over week view. I don't see many of those. You know, as far as high beta and high beta tech, you know, some signs that momentum, you know, has weakened. Okay, we've talked about Google many times, and I've lost money in this a few times in the last 2 weeks. This was the last time it looked like it was going to go. Little breakout failure, engulfed. Okay, this little inside range, and that was your view to say, okay, it's not it's not heading higher. Okay, we had that right here too. Remember, it looked good. You could have came in and made a case that Google is acting very well. Okay, from an active trader standpoint, that if the market was in a better composure or better stance, that this could have been in play for new highs. But what happened? The market weakened. You know, whatever you want to blame it on, and then boom, that was the first time to get stopped out. Then it tried to change a little bit right there, that little red dog reversal. Okay, and it gave you a quick little trade. You know, this was a 2-day move, but then if you ever look for follow through, look what, you know, it didn't happen. It tried to break out and failed, and now here's where it is. Okay, so overall, you know, it's still, in the scheme of things, looks healthy, but there's no momentum there. So if you're playing it short term, it's hard. Some guys are making money short. If that's you, congratulations. It could come back and retest, you know, the bottom end of this channel. Same with Amazon. Amazon looked like if the market was going to be all right, it could have broken above 321. It tried to break out and didn't have follow through. So that was signal number one that momentum stocks were not having follow through. A little bit of a negative sign. I know it's only a slight one, but it's something that we can measure as active professionals. Slight sign, came in, you know, looked okay, obviously on Friday, and then got engulfed today. That's why these things are so random. Green light, red light, green light, red light, whatever. So this bar, though, engulfed this entire range. So if you were playing for a breakout, if you were playing for continued strength, you shouldn't be in there. If you're playing because you've been in this thing, or you've been for 3 years, or whatever it is, or how more, you don't have much to worry about. But, you know, you've held through all this noise and you've taken, you know, the ride, so you might have to ride it, you know, down to maybe right here or even right there. So you just got to know where you stand with this thing. But for guys like us who are looking for great, clean setups, you know, don't see one to the long side now. Some people are probably foaming at their mouth saying maybe Amazon comes in, I can get short below today's low if they open up tomorrow. We'll see. Short term also, LinkedIn, pretty weak today. You know, you saw a little bit of a red bar come in on, what was that? That was last Thursday, an inside day, and then pow. If you've been in this just like in Amazon, from the cup and handle breakout, you know, and you held through this whole noise, you don't really care. But if you're looking for an additional breakout move, is trading for your P&L, this is a little tricky. You know, some might have shortened this, you know, went short when it broke below this little area. You know, now it's at the 50-day, and is looking as if the market wants to stay weak, some people might start selling this thing, and it could, you know, see lower levels. So if you aren't committed to it, you got to be careful. So now what we do know is today's low at 237. So see if that holds. Tesla, you know, I don't see a clean-cut setup there. You saw the breakdown, you saw the bounce back, and now it's going to try and decide. Here was that last ascending channel. When it broke below the 8, some guys got out, got short. Then here was your bounce back, and now it's smack in the middle of the range. We saw the same type of thing happen here, where it stayed in the middle of the range for a few days or a few sessions because it had to absorb this down move then up, and then it continued. So you want to open up Tesla a little bit, and it still acted pretty well today in the scheme of things. It probably penetrated further. If the bears started shorting it here, they might not have made it this whole way. So now, you know, maybe take this out of the way. And I would say, let's see what kind of Tesla we have over the next few sessions. Can it hold the mid-range like it did right here? Okay, and then show relative strength when the market got weaker before going again. So, we'll see. We'll see if the market gets weaker, and we'll see if this could, kind of wedge. Tesla loves to wedge, so we'll see if it creates a wedge and holds, just say, in this middle area. So now you shorten your time frames, maybe go to 5 and 15-minute charts, but know where the daily pivots are. This is now the high to trade against 186.73, and here's this low, and see, what transpires in the middle. Because again, I remember this little, inner spot here, and it was a little noisy, but there was some things to do before it went again. But overall, the trend did hold, and it was better to be trying to be long it around the 21-day versus shorting the 21-day, which has been, the spot to add, the pretty much most of 2013. Apple did what Apple does again today, and it's definitely, for momentum guys, it's frustrating. If you pay up, if you buy high, you're not really able to sell it higher. Here's where it kind of changed, gapped up and held, and that was a really clean move. Since then, this is when this trade changed. Remember, we talk about what's your time frame right here. This looked pretty good, right? From a short-term time frame, looked as if it was flagging again, giving commitment to what this move has been, and then it had event day, and then pow. That was when it changed and went from the A list back to the B list, and then it corrected, and now it's trying to stay on the A list, trying, okay? I would say it's on the B plus list, as long as it stays up in this area and doesn't get below, just say, 474, and that would even be a little tricky. It stays on your B plus list for some kind of move if it wants to finally break above some of these trend lines. But it might need earnings, but earnings are pretty far away. I don't know what I actually thought on Apple that the news that was bigger, unless I'm mistaken, was that the IRS gave them a decent bill of health for their cash situation, besides Jeffrey's upgrade. But anyway, it did hold up decently, and depending on your time frame, you have to figure out where your stop is and just be careful adding to it. I was very careful. I'm like, I don't know if you guys could add here. There was a quick, trade at 488 in the morning, but then if you went after 492s twice, which a lot of people did, I did once or twice, you probably ruined your average cost and didn't make much money in Apple, especially if you came in today flat. So we'll see what happens there. As far as gold, I would have expected if the world was going to end and all the calamity and catastrophe that you see all over the TV, this would have had a bigger move, and it didn't. So we'll see. All in all, for the gold bugs to try and get, I guess, a little bit more excited, you have to really see a move above 129.60. And then it has this resistance, which is 132, and then it has this resistance. So all in all, it's still trapped in a major downtrend where you had an adjustment point at 160, you had one at 149, and now you're trying to figure out if you're not in gold or you're in it small, can it finally get back going? To be honest, I'm not a believer in what could transpire here, so I'm sitting on the sidelines. I might trade it here and there, but overall, it feels like this, gold has lost its luster, and people aren't going to ever barter gold as a way of paying for things. And remember, I told you these. I think what are these called? Again, the rainbow loom. I think that's the reason why gold has less demand, because people aren't buying gold bracelets anymore. Their kids are making them rainbow looms. Just kidding. But anyway, we'll see what happens there. You have to really have a thesis on gold too, especially if you held through the whole year. You just violated every technical rule out there. If you're big right now, it's a thesis. If you're testing it right now, makes a little bit of sense, but be careful. Gold has been random and erratic, and every time it looks good, there's some kind of overnight situation. So just take care there. I think we talked about the banks. Goldman Sachs, was mentioned negatively in Barron's, and stock ever since it got added to the Dow, has been very weak along with the financials, and now it's still just coming into, I guess, what this support has been. So see, it should probably touch here. It's below all the moving averages. Right when it filled this gap, this kind of took out a lot of the energy of the trade, and now it's just been weaker. Gave you a little bear flag for some people who wanted to continue the short. And remember, the XLF did give some signs that, remember, when the spiders made new highs, the financials didn't. They stopped right there. Okay, didn't make new highs, which turned this into a headwind. And now if you see the XLF break below 1973 with some kind of authority, you're going to know it's going to be a bad day in the market, and you could see this, and then this trend that's been intact from here could be in the jeopardy again, and who knows, maybe the 200-day. The banks are literally every day. I think they're giving billions of dollars in settlements, and there's more and more regulation, and they just have not. Every time the market tries to bounce, I'm like, let me take a look at the banks. Oh, they're still weak. Oh, they're being dragged. So don't get excited about the bounce. So until that changes, it's going to be hard. And then the home builders also today started to break below this intermediate area. This was when it ignited and you had that push through failure right there in the home builders, and since then it's been pretty lethargic, working its way lower. And if it starts to accelerate, that's going to be a problem too. So with all that said, I don't see any rush to do anything really from the long side. People are scared of a clean resolution that might happen when nobody knows, and we gap up 300 points in the Dow. You can't trade based on that. Okay, you have to trade what you see, and that's not what you see yet, because this could go. It's what, October 7th. That's October 17th, and it doesn't have to stop then. And if the market was acting well, we'd say, okay, the market's acting well. It's ignoring what's going on in Washington. Things are strong, but that's not the case. Things aren't that strong. Some things that have been holding up are starting to bend, and some things that were bending already look like they're on the verge of, accelerating. So, with all that said, I don't want to say it till I'm blue in the face, but less is more. Low gross, low net. Started talking about that in the last week and change, where I'm losing money long, I'm losing money short. If I have a good long and I add on the high, it spins me around. If I have a good short and I add when it looks bad, it grinds in my face, and that's not conducive for great trading. We've had really good environments, in the first quarter where you could have had 8 to 12 stocks long and rode them and added to them, and they were above the 8 day. You high-five your neighbor. You had a few different other tradable pullbacks, the May 22nd outside day, the head and shoulders top, where some of us were ready for that short. But this recent breakout failure, to me, happened quick. I didn't see it. And now, do you press the trend lines or do you try and buy them? And right now, I don't have conviction either way. So I'm not going to tell you something that I'm not thinking. And what I'm thinking right now, it's hard. And if you're frustrated, do less. So with all that said, today is Monday. I'm actually leaving to go to Europe tomorrow. I will be here for the morning call, but I will be gone for about 7-8 days. I will be checking in, but I'm not going to be up at 4:45 in the morning, tweeting away what's going on around the world, giving levels, this and that. Probably checking 4 or 5 times a day to see what's going on. I will be managing some positions from my laptop, and I'll be less involved. So I wish you guys, I'm not saying the best of luck, but just follow your process. And until something changes, don't do too much. You're not missing anything. The only thing you might be doing is losing money, and then when things get more clear, you're going to have more money to make back in something that could be a little bit more your style. So again, with that said, I'll be here tomorrow morning with the morning call. Then thereafter, John Darcy, who does a great job, will be doing the morning call with Brittany, and then some of the other T3 Live contributors will also be filling in where they have to. Scott Rella, T3 Live, the recap. Have a great night. See you in the morning.